Welcome back. You're watching us here on Halftime Report. The market holding up fairly in the green right now. Let's talk about a couple of these updates that have come in from the BFSI space. Amitava Chatterjee, who's the MD and CEO of J&K Bank, joins us to discuss three key focal points. Obviously, loan growth pickup going forward. Given the second quarter, the loan growth was a little below their guidance. Their margin expansions, outlook on that in the second half, and asset quality. Will that continue to strengthen? Thanks a lot, Mr. Amitava, for joining in and giving us your time here on CNBC-TV18. The obvious question is 12% loan growth guidance that you have given. The second quarter, you've done slightly below 9%. Are you sanguine on meeting this guidance given the offtake that you're witnessing in the second half of this year? Or do you believe that there is room for you to scale down that guidance from 12% to say something like in 10, 11 or 10%?
Good afternoon. Thank you very much for having me here. Yes, absolutely very certain about meeting the guidance. If you look at the improvement that has happened from quarter one to quarter two, I had mentioned during quarter one that I was more hopeful of having a better credit growth numbers in the third quarter, but it has happened in the second quarter itself. Thanks to a very good retail growth. See, our bank is primarily retail focused. So there has been a very good, in spite of all that has happened in Jammu and Kashmir, there has been a very good growth in agri as well as retail. The entire growth that has happened during the second quarter has happened in agri and retail. So very, very hopeful that going forward that we will be definitely sticking on to the guidance of 12% and definitely going to achieve it. I am happy that what I was expecting to happen in the third quarter has already happened in the second.
Okay. All right. Well, thanks very much for joining. And just wanted to elaborate a little bit in terms of the point on loan growth, Amitava. Because in the previous quarter, the rest of India portfolio for you all declined when it came to loans. So just give us a sense in terms of what the breakup is looking like for you all this quarter.
Obviously, I had also mentioned that our focus will be better loan growth in the rest of India portfolio. For obvious reasons, the scenario has not been very good for loan growth in Jammu and Kashmir for this financial year so far because of all that has happened, the floods and the April 22 episode. So we had been focusing on the rest of India, and I'm very happy to share that rest of India retail has picked up substantially during this quarter. If I have to mention the percentage of growth, obviously, since we had initially in the first quarter we had a very good agri growth in J&K. The rest of the growth in the second quarter has come from rest of India. I must say, if I break it up, first quarter and second quarter, first quarter growth had happened in J&K. Second quarter, almost entire growth has happened from rest of India. So this is what we were planning to do, and it is happening. I'm very happy about it.
Okay, so rest of India is positive. It's contributed majority to that 9% loan growth that you've seen. But J&K has also been positive, or has it been degrowth this time?
Not at all. J&K has also been positive.
Okay, so you've recovered on both aspects.
Yes.
All right. Your net interest margin guidance for the entire year stood at around 3.65%. What exactly is the cost of funds, and how are you placed in terms of achieving that?
I can say that as things have gone on and the kind of yields that the large corporates are demanding, the rate of interest that they are demanding, it will be pretty tough for us. But then in the first quarter, we managed to retain a margin of 3.7 plus. So I am very hopeful that we will be able to maintain. Of course, there are other factors. We have been rationalizing the interest rate structure for J&K as well.
Right.
So there will be some kind of pressure. Cost of funds have been a little high because the deposit growth that has happened during this year primarily has happened in the fixed deposits, the term deposit portfolio. CASA from last quarter has improved a little bit, but then major growth has come from the term deposit, but retail term deposit, which is again a good sign. So there has been a little bit of pressure on the cost of funds. But I am very hopeful that we will be able to maintain the margins above 3.6, if not a little bit more.
All right, above 3.6%. What about the CASA itself? You said that it's seen an improvement from the last quarter, but at the same time, your target was 48% plus. Do you think that will be difficult in the current environment?
I feel so. The guidance is 48%, but how the things have moved on in the first two quarters. First quarter was a very bad quarter as far as CASA was concerned. We had a degrowth, but fortunately, we had a growth in CASA in the second quarter. We have taken certain steps, quite a few steps for that matter. So it is showing results. I hope the focus on CASA will remain. We are opening more accounts in rest of India, which we had not done earlier. So that actually is adding to a better show in CASA as far as the second quarter is concerned.
Running out of time, Mr. Chatterjee, let's wrap this conversation quickly with the word on the asset quality. You started by saying all that has happened in J&K and Ladakh. Do you think that will have any sort of impact on your asset quality, or you're sanguine on the guidance that you've given with regards to GNPA and NPA?
I can only say the provisional figures that I have. The NPA has further gone down. I mean, the NPA percentage from March. So definitely we are holding on.
So you're sticking to your guidance of below 3% for the fiscal for gross NPAs?
The guidance is below 3% for the year.
Yes.
At the moment, we are slightly above that.
So you're sticking to your guidance of below 3%?
Absolutely, absolutely.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in. So still sticking to that credit growth of around 12%, gross NPA below 3%, and net interest margins of around 3.65% for the entire fiscal FY26. That's what G&K Bank is aiming for. That stock just about holding with a gain of around 0.19%. We'll take a short break, but up next, Achtan and Uttikar will join in to discuss technicals. Stay tuned.